G'day everyone, welcome back to Pete's Investing. Today's May the 10th, 2023. This is the nat gas price update. For those new to the channel, we look at the weekly and daily trends and we trade on the lower time frames. So what we're looking at here is the weekly is showing a bearish momentum primarily, and the daily is in a neutral positioning at the moment. And I'll explain some of the trading ideas at the very end of this. So on the weekly first, again for those new to the channel, we look at the triple moving average, the moving average 3, 5 and 60 of the price chart. And we look at the CCI 150 with the moving average 5 and 50 of the CCI 150. When they're both aligned like they are at the moment for the last couple of weeks, we show this bearish signal down here. When it's flat like this period, it means one of the indicators of the price chart or the CCI are not aligned, and it means it's a neutral stance. When it's in a bullish movement, it means both are in a bullish momentum. So at the moment, bearish movement on the weekly of the nat gas price. You can see that actually quite clearly on the descent of that price anyway, but that just gives you an idea in terms of the moving averages of the CCI and the price chart. I'll explain why the CCI and the price chart moving averages are important and why they're different. On the daily chart, this sort of highlights it more, and you can see here there's a neutral stance on the daily. Now it's been hovering in this range. You can see there's a support level at 2064 and a bearish, resistance at 3050. Now the price has been bouncing in that range and it's been declining as well from that high to that low, and it's actually gone as high as almost a 23% Fibonacci retracement from that high to that low previously. So it's making some further advancements off this diagonal ascending trend line. That's our horizontal support area. I mentioned at 2064. This darker line is the diagonal support, and if I zoom out, you can see there it's running across those bottoms there. So it's currently sitting and bounced off that area there. Now it's currently approaching this minor resistance at 2504. So that's where we are at the moment. Now, why did I say the moving averages of the price chart are different to the moving averages of the CCI? It's because of this difference here. You'll notice here there's a bullish divergence on the CCI versus a bearish divergence on the price chart. So the price is declining between those highs, whereas the CCI, you're getting higher highs on the CCI, and that's called a bullish divergence on that. So for this to work or to play out, we need to see the price break to the upside and also the CCI to break to the upside as well, if that's going to work. Otherwise, if this fails, we'll see the CCI break to the downside, and by that stage we'll also see the price collapse and break below these support levels. So that's why we look at both moving averages of both charts. That's the daily, again showing a neutral stance. On the hourly or any lower time frame, one trading idea. Again, first off, before I go to the trading idea, we look at these diagonals. There's quite a few here, but we've got this diagonal descending down here. You'll notice overnight it's come and bounced off that, and again just bouncing slightly to the downside. So, and they've got this also, this ascending diagonal line. So if it breaks above this descending line, it should probably come and rest somewhere near this ascending diagonal. And then there's that minor resistance I mentioned earlier at 2504, and this diagonal ascending line which I mentioned earlier as well from the longer time period. So as a trading idea, I've got if you do, first of all, as a trading idea, you need to follow making sure the weekly and daily are in alignment. So once the daily breaks, if it breaks to the downside and it shows a bearish signal like it does back here on the weekly, that's when we can start taking more safely with a better probability of success, taking short trades on the hourly. So at the moment it's neutral, so avoid taking long or short trades. But what I've got here is, again, going long. Typically you would take it when the candle breaks out outside of the fractal. This grey area is the fractal. So you could have gone long there, long there, long there, etc. And going short is the opposite. When a candle breaks below the fractal, you go short there, and so on. And I like taking little percentage gains like in that little period there or that little period. So when it goes against you, when the price goes against you, so again, primarily we're going to be taking short trades only when the daily breaks to the downside. Again, wait for this signal to correct there. And what I've got here as well is a back test program which I've run. If I zoom out to that level, so it goes back there to the September 21. All these little bars there indicate single contract entries and exits with little profits gained in each one. And here it's trading the nat gas $10 contract. with the exception of these two areas, that one there and that one there. You'll notice there's a step. It means there's two contracts entered, first contract and second contract. The way that works is, if I zoom in, the first contract was entered there, and the second contract was entered with a good 5% decline down to that level. That's where the second contract entered. And when the price corrected, let me just zoom in a bit more, you'll see there, first contract entered there, second contract there. So now the break even is somewhere in the middle, and the profit would have been taken as where it closed at that level there when it broke above the break even. So those two contracts closed out. That's your profit gain. So your profitability there was at 45,265 and closed out at 46,015. So I made almost $1,000 in that. Again, we're trading nat gas $10 contracts. Now I'm only using the long positioning here as a back test, but you can apply the same logic to a short positioning. So again, there was quite a big, and you notice here you wouldn't have entered any trades during that period because, again, being a long contract only, long positioning, you would avoid going long when it's going in short. So that's the only time it would have gone long, when it started showing little potential upswings. And again, we only trade the hourly when the daily and the weekly are in alignment. So taking short trades once the daily breaks to the short side, the weekly is already in a short positioning. So to understand this and other average down approaches, subscribe to my Patreon page for more support and exclusive access to scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.